All right. Hello, everybody. James Bishop here. Want to go ahead and get started. Everybody can hear me. Give me a wire yes in the chat box. Let me know you guys can hear the sound of my voice. And we are ready to get things started. Justin, thank you, my man. Good to see you, bro. Really excited to have you here. Let's see. Contasia, thank you. Daryl, thank you. Jerry, we will be talking a little bit about that and what's causing that as well. Theodore, thank you so much. DJ, Daryl, Dennis, Mario, Pam. Pam, I hope you're doing well. I hope it is somewhat, I hope you're not having to go outside, is all I have to say, with where you live in this wonderful weather that is blanketing the United States. I swear, I don't know if you guys saw this or not yet, but I'm sure they'll talk about it on the news tomorrow. Pensacola, Florida had snow on the ground. So you can imagine how cold it is. Orlando's not that bad, right? Our low tonight is, in the low 40s, but most of the state in the northern part is even colder. Let's get this thing started here today. We have a lot to unpack in the market. I know last week, I apologize again for not having that session. I was at a conference last week. My brother got engaged that Saturday, the 10th. So I had an engagement party. And then Monday was my 40th birthday, and I was traveling that Sunday. So it is, I try to miss as few of these as possible. There is going to be one I missed next month, and we'll talk about that as well. So getting started here really quickly, got to let you know, not acting in my capacity as a licensed financial professional, simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. Really quick, is this anybody's first session in here? Yes or no? Is this anybody's first session in here? Yes or no? First time with me. Some of you. Okay, great. Well, good. Rosemary, good to see you as well. For those of you guys in here that haven't been in a session with me and haven't been, Rodney said the iguanas are falling out the trees. That's true. That haven't been with me. I've been in trading and trading education now. This actually needs to be 17 years. This is how you know I'm always live, and this is what we do on Sunday sessions. We correct problems as they happen. But I've been in trading and trading education for 17 years. I'm the founder of a managed fund. So what we do is we individually manage people's accounts. Last year, we ended with a return of like 32% or something like that. Year before was 37. Year before that was 40. So over 100% return in 3 years is pretty darn good, to say the least. And then I am the owner and founder of a retirement and estate planning company. I help people prepare for retirement, offset their taxes, retire tax-free potentially, as well as, protect their wealth from any downside in the market, which we will be talking about here today. I have my MBA in finance and global portfolio management, and currently working on my doctorate in finance and economics as well. So that's just a little about me. Like I say that not because I need a pat on my back or anything like that, or my dogs really don't give a darn. As long as I feed them and take them out, they're good to go. But the reason I say it is, like, this presentation isn't like your typical like sales presentation. We're going to go into news, trading, information that is going to help you make decisions on what to trade, where to trade, how to protect yourself, and things that you may not been aware of in the news as well. So quick housekeeping stuff. First is the Wealth Watch. For those of you guys that don't know or didn't see the post on Discord earlier this week, I have launched a newsletter service, daily-ish newsletter. I missed this Saturday just because building the routine, but hey, it happens. This newsletter service is called the Wealth Watch. It comes out every single day. Gives you, stocks that you should be looking at, opportunities you should be looking at, and how to protect yourself. And then I also go into some trading psychology as well. To subscribe, all you got to do, guys, I'm going to send you the link in here. that's the link to subscribe to it. The Rolex of info. No, Jerry, it does combine my two of my favorite things. Like I am a big watch fan. I have a few Grail watches that one really Grail watch in my life that I want to get, that I will get one day. And then I've already gotten one or two others in my life. So I'm a big watch guy. So it's just kind of play on words and works out with that. But subscribe if you can. Emails will come out. They're not, I'm not here to sell you anything, guys. Everything I'm going to do is either going to be invite you to a webinar or invite you to my sessions that I'm hosting. That's it. The next is Discord itself. So we have we're getting very close to 500 individuals on our Discord channel. So if you haven't yet joined the Discord channel, feel free to click on that link and join in the Discord. There's individuals that ask me questions. I even have my direct messaging open so people can ask me questions and send me questions directly. And then we have individuals like Stuart in here who sends out his trades and trading opportunities as well. And others, feel free. Okay. Others, feel free as well to join, to do that. So click on that link. That link will only last for 7 days. Okay. That link will only last for 7 days. And then I am skipping February 1st session for my 40th birthday. Me and a couple buddies were going to actually to LA and then to San Diego to play some golf. So that is that trip, and that's the only session I'll miss from that trip because I get back the day before. So we will, resume normal from there on out. So let's go into this week's major fundamental news announcements that you need to be paying attention to. Lee, it's actually late. My birthday was January 12th. We just couldn't go play it this week because there's a tournament there, I think next week. So we had to, the course I wanted to play is Torrey Pines. So we couldn't go out there because of the tournament that's going to be there. So I guess the tour doesn't want me on it, for whatever reason. So this week's fundamental news announcements we have on January 21st, we have President Trump has a planned speech. Don't forget, markets are technically closed on Martin Luther King Day. You'll probably see some futures trading and some Forex action and some little bit of trading here and there, but most of the markets will be closed. We have a planned speech by President Trump on January 21st. The 22nd, we have core PCE price index. Now, for those that don't know, PCE stands for price consumption expenditure. And that's the measure of inflation that the Federal Reserve uses when they factor should we raise rates or lower rates. They look at it month over month, and then they look at it year to year by month. So they look at December of 2025 compared to December of 2024, how much inflation has there actually been in that 12-month span? And so that will come out. GDP numbers will come out as well. And GDP is gross domestic product, and we know that's a formula. And then on January 23rd, we have manufacturing Purchasing Managers Index and Services Purchasing Manager Index. And this is a precursor announcement to any and all inflation. Now, if you want to, and if somebody can, screenshot this and post it in the Discord channel, I'd be greatly appreciated for you to do that. And then just type in done when you have it screenshotted, or if you're not going to screenshot it, type in done. It doesn't matter to me. Let's see. In 3, 2, 1, and done. Thank you so much. And then we got a whole host of earnings announcements coming out this week. Tuesday and Thursday are your bigger 2 days and what I did was I looked at the top, I did the top 10 by market cap, but then I included a couple of smaller market caps like DR Horton. That's one I like to look at. 3M. That's one I like to look at. And United Airlines. I'm always interested in there. Okay. So on Tuesday, we have GE Aerospace, we have RTX Corporation Raytheon, we have 3M, we have DR Horton, and Netflix, right? Netflix. And you can see on this, you have before close, after close. I kind of trying to make this a little more with feedback from you guys, what you guys want to see. Wednesday, we have Johnson and Johnson. They report before market open. And then Thursday, we have Abbott Labs, Union Pacific, Railroad, Intel, um, Intuitive Surgical, and then Friday, Procter and Gamble. All right. So if you want to go ahead and screenshot those for me. Yeah, Sharon, Salesforce and CEG, we'll look at them too. I'll bring up the earnings calendar just to make sure the day and time if you want to look at those, but we will. All right. And go ahead and screenshot this and type in done if you're going to screenshot it. And if you're not, that's all right. Just type in done for me so I know you're good to go. And when I get like 5 people, and Jared, I'll go back to it. All right. Beautiful, beautiful, beautiful. Thank you. All right, perfect. So Jerry just asked if I could go back real quick to this one. So go ahead and screenshot that, Jerry, and type in done. All right, perfect. So now, before we jump into charts, I want to talk a little bit about some bigger news that has come out. The first bit is HR 3339. This is a House bill. Okay. And what it's done, it has passed the House and it should be, I'm going to say should be voted on the Senate this week. The reason why I say should be voted on by the Senate this week is because of the other announcements that we're going to talk about around Greenland, EU, and everything else. So when we look at this, okay, what is this bill? Well, this will allow everyday investors to bypass the accredited investor rule. So the $2.5 million minimum net worth, and not including your house, and then a couple other accredited invested rules that they have for investing specifically in private equity. Okay, so this bill, like I said, it already passed. It should pass the Senate, which would open up more opportunity for all of us, right? Because you could go in and then invest in a private equity firm that is going to be financing companies. Because I don't know if you guys know this or not, but over the last decade, let me ask you this question. Actually, you guys tell me, it's either going to be up, down, or stayed the same. Do you think that the number of publicly traded companies in the last decade has gone up, down, or stayed the same? Type it in really quickly. U for up, D for down, S for same. So we got one up, 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 down, 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 up, 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 up. Guys, it's actually, we have shrunk. Even in I can tell you 20 years ago when I first started trading, there were 10,000 publicly traded companies. Now there's like 4,300. Because they don't see going to the market as a viable option for building equity and getting cash to go finance other projects to grow, because private equity and private banking and private credit has taken over that aspect. So now this opens us up to a whole new swath of opportunity. Now I guarantee you there's going to be some more things in there, right, that we'll need, and you'll have to pass an exam in order to be able to be in investing into this. But this is something that you need to be paying attention to, right? This is something you need to be paying attention to, because entrepreneurs, they go to Y Combinator, they go to, they go to these private equity funds that allow for investment and board seats and getting experience and directors. It's, I have friends in the PE world. I actually worked in private equity for a number of years, and it just, I mean, it's a behemoth of an industry. And over the last like 60 years, the private equity industry has offered about a 15% return to the S&P's 8.1% return. As a matter of fact, it's one of the few things in this world that has kept up with inflation. Okay, so that's one bit of news. And as this passes, I will get alerted and I will post stuff in Discord and I will, announce it on these sessions. The next is housing plans. Okay. And there's two big things that happen. One, the ability to tap into your 401k may be happening, and the no more hedge funds in single family homes. Okay. Let's see. Lee, all of that hasn't been worked out. Right. So Stuart, you would no longer need accredited status for angel investing. You would be investing in the company providing the angel investing. And so that's how they're going to do it. You don't get to select the projects. You just get to buy into that company. That's what that is. Okay. And then, we don't know anything else other than the very basics. Okay. Now, the two things here, the ability to tap into your 401k, President Trump talked about this a couple of weeks ago, and then he said he was going to make this announcement. So you could take 10%. You could take a certain amount out of your 401k in order to buy your home or for a down payment on a home, which you want to hear something crazy? So the history of the 401k began in 1956 or 1940 something, I believe it was. And it was actually called an SEP 401k, a supplemental executive plan. And it wasn't designed to be a retirement account. A 401k was never, ever, ever designed to be a retirement plan. And as a matter of fact, I think if you went to go pass some of that stuff today, people would pass on that. Okay, because it just doesn't. It's not the best opportunity that you can do with your money. And we could talk whys in another session, but this would allow people to take money from their 401k for their down payment. The supplemental executive plan was literally so you could set aside money and then take that money to go buy a home. That's what it was built for. It was built for the baby boomers to do just that, and it worked up until 76 when they changed the regulations and took away pensions and took away different forms of retirement and made the 401k gave the 401k, your company gets a tax break for every dollar you put in it. But when you go to pull money out, you have to pay that tax. So the company offsets their tax burden, but you get hit with all the tax. A lot of people didn't know that or don't know that. And that's why, this 401k is a huge opportunity for people because, hey, if they have it, they can borrow against it, buy their home, which could help with their down payment with what it is. Now, the second one, this I don't think will have as big of an impact as people may feel it does. The one that is going to have a big impact is going to be this next one. If this does pass and if this does happen, right now in America, there are 900,000 homes listed for sale or for sale by owner on MLS or Zillow. 900,000 homes. There are 16 million homes that hasn't had a foot set in them within the last 2 years, because they're bought by hedge funds. Now, how does that work and what do they do with it? That is a great question that I have the answer to because of a friend of mine who's one of the compliance officers with BlackRock. So what they do is, let's take a fictitious company. So comp company, they start Fund A. Fund A buys 200 homes in a neighborhood, okay, 200 homes in a single neighborhood. Now, what they do is they wait for the rest of the neighborhood to sell all of the homes. Then they list 3 of their homes for sale. So just using like simple math here, okay? They buy 200 homes at 300K. They sell 3 at, let's call it 600K, just for simple math. They get them at 300 because they get the discount from KB Homes and all of these DR Horton, because DR Horton wants to move inventory and free up cash. So yeah, they'll make 5 or 10% profit on every home, and then they'll take that money and go build the next subdivision. Well, they sell 3 of those homes in that subdivision at 600K. Fund A does. Now they can value the other 197 homes at 600K, and they sell those to Fund B. Now, Fund B gets a bunch of tax benefits, and then they sell 3 more homes and drive up the price, and then they do it again and again and again and again, but only selling 3 homes at a time. That's why there is such a big housing issue around first-time buyer homes, and then even some of this new neighborhoods. It's what's driven the price up so high. It's literally that. So there are it's because they can't afford them, Jerry. Right? You have to come up with the down payment that people want, and then the interest rates are high. So the prices go up because all of this inventory. As a matter of fact, in 2025, 45% of all real estate transactions were to hedge funds. 45%. That is a staggering statistic. It's unbelievable. And so hopefully it does go away. We will see. So we're going to run through some stocks now and some stuff in the stock market. I saw some people ask for a few stocks: SMCI, APLD. What other ticker symbols do you guys want to see covered here today? Go ahead, type them in. Anything works, right? We're going to cover these ones, the ones in yellow up top, and then these down below as well. Let's see. We got Melly, SPX, PPTA. I think we are already in that one. So yes, we got that. BTC, MTCH, AVGO, Meta, ISRG, you got it. EPD, Pound Yen, GBP, JPY, and then CAD Swiss and SIGA. And that should work for now. All right, perfect. So let's first start with kind of like the broad overview of the market. I'm going to bring up SPX, which is the S&P 500, right? It's just a way you can trade options on the S&P 500, but it gives you the most accurate price of the S&P 500. So we close on Friday at 69.40, and I am telling you guys now, I do believe we are going to have a drop coming up on Monday, mainly because of uncertainty, right? The market hates uncertainty. All markets hate uncertainty. So I am looking at a drop in the overall stock market and a massive bullish day in gold and silver as well. So we have Trump said he'll hit Denmark and 7 other EU NATO countries with new tariffs for up to 25% until there's a deal to buy Greenland. The EU is suspending the trade deal with the US over this new tariff threat and investing in, and then the US trying to take Greenland. Um, and then, there's just this a huge back and forth. And then the U.S. Senate Democratic leaders are seeking to block Trump's Greenland tariffs. EU may reportedly activate an anti coercion instrument. I mean, this is yes, Monday markets close. You know what I mean? Guys, go to the next day. If you know the market's closed, just go to the next day. There you go. You have, then additionally, you have Canada opening up to Chinese EVs as well as Mexico, and you can go and buy one of these EVs and drive it into the country without an issue and register it and not have to pay the 100% tariff on those cars. And you could buy a car for way cheaper. NVIDIA, their chips were blocked by China. Now, for those of you that don't know, and I got a couple people asking, this is called FactSet. This is a software. You don't want to buy it. You have it accessed through me. It's $5,000 a month. Okay. So you don't, I get it because I manage an endowment fund for a university as well. So, they give me access to this. The other, otherwise don't buy it. So we have, and then, the President Trump also is considering an executive order to impose a ceiling on credit card interest rates, which sounds good, but that may mean that there's less people that they would ideally have a 10% interest rate on their credit cards. So they would cancel a lot of people's credit, which would ruin a lot of people's credit scores. So, there's just a whole heap of mess, right? There is a whole heap of mess out there going on. And we also have the Supreme Court ruling on tariffs in general. So we will see what that looks like as well. Should be coming out this week or next week. So that all to say that I suspect a lower open come Monday. Now, if we look at the ES as like a kind of a, hey, where is the market going to go? That's not the ES. This is the ES. If you look at like the 15-minute chart, this is where we closed on Friday, 69.78. We opened today at 69.16. Sellers are still in control. We're still in the sell zone. If we look at the daily, sellers are way in the control. We just got this red dot. This could be that big push down that the next kind of pullback that we should experience in the market. Now, am I saying the world is going to end and everything's going to fall to the floor? Absolutely not. Right? No world wars or anything like that yet. Who knows? One of these days, maybe, right? But I never count anything out. But with this right now, we still are in an uptrend. Well, technically the trend line just got broke, but hey, we still have up Fibonacci's as well, which tell us, our where the market could rally to, which would be 7,100. My prediction this year is that the market ends up at like 7,300. I don't think we're going to have a massive year, like a 10 or 12 or 15% year. And even last year, people, when they talk about last year, they only talk about this part, right? They only talk about, sorry, I'm wrong tool. They only talk about the part from, April to the end of the year. Yeah, the market was up 39% from there. But if you go from January, where we were, January to end of the year, we had about a 13% year in the S&P 500, which is great. But we did have that big fall right in early February. Could we see the same thing occur? I don't know. But what we need to do is set ourselves up in positions to make sure that we are protected from this, right? So, if you're in the ES and you were buying, do something to potentially move your stop up and lock in some profits. If you're in the S&P and your 401k, your IRA, something like that, if it is, if you don't want to run the risk of losing all the returns that you built, You have the ability to put in a stop loss, and it doesn't need to be right at the high of the market. It could be right here, somewhere below this most recent low at 67979, giving you about 200 points of movement before the market either takes off higher or breaks down lower. Right? You have those choices. And that's something that I think everybody should do, because in the event of a major market meltdown, like what we had with a 27% fall, you don't want to have a 27% fall if you can, right? You kind of want to avoid this if at all possible. Now, there are accounts that actually I'd love to talk with anybody who's interested about, where you actually have the ability to never lose. And meaning you can lock in profits every month, or you can lock in profits every year or every 2 years, to where your money will never lose a penny of the growth from the investment and the principal. Okay. Jerry, ES is the S&P futures contract. Okay. So looking at the NQ as well, which is the NASDAQ, if you look on a 15-minute chart, you can see we had a big drop here. We've gone from 25,684 down to 25,384. So that is 300-point drop from Friday to today. Now, for those that don't know the power of futures, I'll just show you what that can mean for you. Right? If you would have sold on Friday, and let's say, yes, you would have had the leverage to be able to hold over the weekend, you would be looking at right now, come Sunday night at 7:31 p.m. Eastern, you could lock in a $5,965 profit at this very minute, if you have the ability to trade and hold those trades. That's what the NQ could mean for you. Let's run through a few. I'm going to slide this over just so I don't have to keep going back and forth. Let's go Lulu. So Lululemon, just FYI, we got into Lululemon a while ago at 164.50 was our buy, and we're sitting now at 201.87. I still think Lululemon is going to get to our ultimate price target of 329. But what I am looking at is from high, low to high, and low to high. Oops. We're looking at, this is pulled back. I think we fill this gap down to 190. I'm not worried about the $10 move here before we hit up to 255. Right? So if you haven't gotten into this and you're looking for your next entry, or if you took profit and you're looking for another entry, somewhere in the 190 range is where you want to be looking at for your entry. Okay. Somewhere in the 190 to 195 range is where you want to be looking at for your profits. So that's the quick update, or to lock in another entry. On United Healthcare, this is down to 331.02. We got into this at like 270. And we will continue. The goal for us, FYI, is to get to 582. Our intermediate target is 397.27. I still see this as a easily viable target for us to hit. If this market, what we need to see from this market is it to break this most recent high here from January the 6th, or correct in this trend, right? A blue dot, something in there. If you're not in it, don't buy it right this second, because it does have the potential to go down to 257, right? We still have a gap in here. We still have a gap in here, right in here to there. And so if this market comes down to 290.77 or 283, those are really good buying opportunities. Okay. Next stock is, let's go PPTA. PPTA, for those that don't know, they're a mining company. They're owned by Peter Thiel. And just like Palantir, PayPal, all of the other Peter Thiel companies, this is another one that should continue to rocket higher. Now, our first buying opportunity was at $25.32. We're sitting at 32.23. And so with that, look, feel free to lock in the profits right now. We're seeing buying energy is starting to wane. Selling energy is starting to crawl a little bit higher. They're still building mines. They still have big opportunities. They're still, partnering with the U.S. military. I wonder where Peter Thiel got those connections from. Palantir. Interesting how that all works out. But again, I still think this is going to be a big mining company at the end of it. And I think that this will be one of the biggest mining companies at the end of the day. This is potentially going to pull back a little bit, even if it fell back into the $27 to $25 range, I wouldn't be surprised. So if you're on the fence about it, if you're itching to lock in your profit, feel free to lock in, right? Feel free to lock in. We just made an all-time high. We'll typically see a pullback after that all-time high. If we look from our most recent low to our most recent high, this still says 35.70 is our first kind of, hey, we want to take profit at that level. And even then, you could just move your stop up, right? There's nothing that stops you. And I'm going to change the colors of this line. We'll call that a take profit. And let's say you currently are in this stock, and let's say your stop was there at $23. Well, if you're at 32, why don't you just move it up to where, hey, I'm going to lock in, I don't know, $3 to $4 worth of profit, or I'll trail the market by $3 to $4. And that way, if it does happen to fall and pull back, great. You get stopped out, you make some money. Wow, so horrible. You could buy back in and then go back up. All right. Let's see. Sylvia, I think they will continue to stay down. I think we will get a little bit of a fill the gap scenario, but I think overall it will continue to stay down. Mark, good to see you, buddy. Let's go now to let's take a look at Warby Parker real quick, because that was one that we talked about. Very inexpensive stock when we talked about it on 11:30. So when we were looking at Warby Parker, 11:30, which was right in here, the stock cost us $19.78 to buy. It pulled back 2 to 3 days and then kind of had a nice little bump up, pulled back and back up. Look, I think this will continue. You feel free to lock in profit. I am going to lock in my profit on this. Hold on a second. I'm going to put this. And I will look for another entry in the near future. But 28.16 is where we close. That's at $8.35 worth of return. That's basically what, 50% growth in the stock since we traded it, since we got into it. So I'm not mad at that at all. And then I will look at Warby Parker for my next entry as well. If I use something like Fibs, I have a pullback. This could potentially rocket to 39.14. I think what gets us there is last year, they announced a partnership with Google to create a very affordable AR glasses that was mass produced, because Warby Parker, they produce every piece of their glasses, and that's how they can control costs. Well, with that partnership with Google, when that technology comes out, I think it's going to be massive, and this is going to be a stock that you're going to want to have access to. Okay. Mark, on this one, I generally I do a little of both. On this one, I just bought the stock. Okay. Just bought the stock. Um, Next stock, NTLA. We talked about that. I told people $8.99 to buy this stock company because what did we look at with NTLA? If anybody remembers, I looked at who the hell owns the company right now, right? I went into and said ownership, ownership activity, and we saw that we can even go company summary. ARKK, they added a bunch of shares. Vanguard added a bunch of shares. BlackRock added a bunch of shares. SGGA, Goldman Sachs, Morgan Stanley, all on the same day, they filed their S1s, and all of them bought in this same price range that we are buying in right now. And that means one thing. Do you think any of these companies, BlackRock, Vanguard, ARK, SSG, State Street, Global, Goldman Sachs, Morgan Stanley, do you think any of those companies are in the business of losing money? So this one, I bought the stock, bought it at $8.99, bought a couple hundred shares, and I'm looking to get out, not even at this, at 25, I'll probably take half of my position off. But at 75, 100, somewhere in there is probably where I'll get out. Now, this company, NTLA, they had developed a treatment for pancreatic cancer that was showing a ton of promise, but then they had a few patients die. They had to pause their clinical trials and they resumed them, and everything seems to be going swimmingly. So 1250, potentially a good opportunity. That is something there. Let's look now at Netflix really quickly. Now, Netflix reports earnings, right? They're sitting at $88. And so look, you have because there's like some short volatility, you could potentially use an iron condor and sell an out of the money call and an out of the money put and buying further out of the money wings for protection. So that way you can, risk this and you can get some of the implied volatility because who knows what happens, right? They're still in this acquisition deal. They're still, if they raise costs, that was always a bad thing. But there could be when they report earnings, this could shoot way up, right? We know there's going to be volatility around the earnings. They haven't quite reached this level of support down at $82, but we could see this go all the way to 123. So this is one of those that are like very speculative plays. There's a lot of things, and market prices in typically, we might get an implied volatility crush here coming with this. So this could be a big opportunity here with Netflix. Next stock we want to look at. Let's go GE Aerospace. GE Aerospace, obviously, it's pretty good benefit. It's been shooting up. I just think they're going to probably have, personally, think we may see this stock fall a little bit, not crash, but just kind of correct a little bit down to like the 50 period moving average, somewhere in that 300 realm. And over the next couple of weeks. So you could do like a bull put spread where you sell a put below the current support level and buy a lower strike put for protection. Right. Just to make sure that you're protected on things and you're not losing your capital. But this is a great opportunity around GE. I just think, we'll see what happens. They did get awarded some government contracts. We will see what the guidance is for GE. They beat on the last 2, 3, 4. They've beat pretty much every quarter since 2022. So continuing on for a potential beat, we will see. And then let's take a look at Intel. Now, if you were in some of my sessions, last year or the year before, Intel was something I bought at like 18 bucks. Held it for like 42 and then got out, you know. It ran up to 51 recently and is pulling back. They're going to have earnings. This will be an interesting earnings call, to say the least. This is one of those that, you know, with the government involvement, the award of the contract, how is their production? How are they improving? You know, I expect a surge one way or the other. So a long straddle, right? A long straddle on Intel is what I would consider, right? So long volatility. So you buy an at the money call and an at the money put at the same expiration, and whatever may be, que sera, whatever happens, happens. And then you close it. You close one side of it after the earnings, if you can, and or right in the morning, and you close for profit and you walk away. Now, if you don't know what you're doing with those strategies, stay away. Stay away. If you don't know what you're doing, stay away, because they could really, really hurt you, right? You could strangle. Yeah, you could do that as well. I prefer straddles around plays like this, just because of the volatility that is probably going to have, especially with like an AI narrative and chip manufacturing and all of that and stuff like that. I just think that it's going to shoot one way or the other. So this will be a very interesting play on Intel. Let's run into some of these others because we'll do gold and silver. So here's GC. I'm going to look at gold futures because they are moving. This is today's movement on gold futures. When gold is up, that means people are leaving the stock market and putting their money in gold because of fear, volatility, and all of the mess that's going on, right? And all of the mess going on. So we see gold futures up. I anticipate gold futures to continue to rocket higher this week. As I don't see things simmering down this week. I'll just say that. Silver, we see on, oh, that's SLV. Let me go SI, which is silver futures, so you can see. Silver shot up since this afternoon. We went from a close of 89.94 back up to 93.661. That is an all-time high again. We just set, actually it was as high as 94. That is an all-time high again, and I think we see silver at $100 an ounce. Don't look as crazy as I did. Look, I'm going to tell you guys, I was telling people to buy silver in like 2012. Okay? You go back to like 2012 and you look at what silver was, and you go back, I don't know. Here, I'll go to a yearly chart. All right. You look at silver back then, SLV is what I was telling people about. Back in like 2012, we were at like 15 bucks. And I've been steadily buying little by little, just holding it because I knew from a manufacturing standpoint, silver is going to be needed in all technology. Right. That's one of those elements that we just can't do without it. Its ability to conduct electricity is far better than most. So it's a great opportunity. Dennis, 25 bucks. I love it, Dennis. Been in it for 25 bucks, Dennis. Awesome. And I miss your emails. I hope everything else is going. Helwig sees gold going to 8K. You know, honestly, I wouldn't surprise me. Wouldn't surprise me in the least bit. It doubling from here. With all the uncertainty and all the things changing, money doesn't like to be uncertain, especially with the massive amount of individuals we have retiring, right? They're going to need to put their money in something safe because they don't want to have to go back to work. Now, there's two things you could do. You could sell and buy gold, and that could do something for you, or you could give it to an advisor, and they could really screw some stuff up for you. I've seen it personally. Or we can have a conversation. And I'm going to give you guys a link later to set up a time to talk with myself or Brent or anybody like that. All right, so let's go to SMCI. SMCI, big bullish move on Friday. That is good. Earnings coming up on Tuesday, February 3rd. Don't like that they are constantly missing earnings. I'll tell you that. And then this is that, hey, tech, take a bunch of profit, and then people, insiders taking profit. Do I see this on like a massive run up? Maybe up to like $50. This is a potentially good opportunity. We do have a lot of good things around, SMCI, but a lot of downgrades. A lot of downgrades. Here's the thing about companies like this. I actually like to buy them when they're like this, right? If you can buy a good company at a cheap price, it'll put a smile on Warren Buffett's face. Okay. It'll put a smile on Warren Buffett's face. That is for sure. So, look, if you're going to get in this, I would take it up to 50 and then I'd look to be locking in profits. Okay. Next is let's go to APLD, which is Applied Digital. Man, sitting at a near all-time high. Just beat earnings and rev. Probably would look to lock in some of this profit, or at minimum, I would set like a stop to like $32. Give the market the ability to swing down $5 and up or whatever, but I would just be trailing the market by $5 because yes, it could continue to rocket higher, but if it did fall back to, let's say it fell back down into this area, would you be mad if you locked in $34 a share, or would you be mad or $32 a share? Or would you be mad at yourself for 1952? Right. There's a Nobel Peace Prize winner named Daniel Kahneman, and not Nobel, but he won the Nobel Prize for economics, him and Amos Tversky. And they created what's called prospect theory. And now there's 5 major tenets of prospect theory. It's part of my dissertation, why I know so damn much about it. But there is the saying that the joy of gain is not as impactful as the pain of loss, which is why we constantly make mistakes. Which is why when the market is up, we're like, oh, it could go higher. But when the market goes against you, you tend to get out at the bottom. Right? You tend to get out at the bottom. So this one, I would look to protect myself on. That's just what I would suggest from personal standpoint. Let's look at Melly. Melly, I still think, a little bit of a reversal, showing signs. We broke the lower lows and the lower highs. We're making higher highs and higher lows. Don't like the 2 past earnings. We have earnings again late February. It's with, you have to understand what is the purchasing power of everything going on in South America and what is the certainty and uncertainty situations in specific areas. So that is why this company is continuing to push down. I don't know if it's made, making this new high is great, but could it push back down to 1720? Absolutely. Okay. Could it push down to 1720? Absolutely. Let's go pound yen really quickly. Pound yen on a daily time frame, with the yen carry trade still kind of unraveling, but then fresh EU tariffs, probably going to see this fall a little bit. This begin to fall a little bit. Okay, I do believe that we will more than likely see that. Coming up, look at that. We had a gap down. The market has nearly filled that gap. So after it fills this gap at 211, 478, I think we begin to push down. 211, 478, and then begin to push down on the 5-minute. Daily, I think, yes, we get a little bit of a bullish, and then we start to break down on the CAD yen, on the pound yen, simply because of that yen carry trade unraveling. And then the pound, then additionally, the pound, with the uncertainty from the whole Greenland deal, what happens to that, right? Dennis, I personally like the diversification that silver and gold bring. When I have physical silver and gold, and I'm still like, if gold gets to 8,000, then I know silver is going to get to 1,000, if that makes sense, right? Sharon asked, do you think we'll have another government shutdown coming up? Sharon, actually, they extended they extended the Affordable Care Act and some of the subsidies around it in order to give more time. Just like, I got somebody cursed at me in the webinar for saying this back at the last government shutdown. I said they should just extend them for 6 months to a year and then come up with a better plan. But I was the crazy one for saying it, and somebody cursed at me and called me all sorts of stuff out my name and then left the session. But look what happened, all right. They approved it, pushed it down the road. So no, I don't think will be a government shutdown. I think they'll raise the debt ceiling and, to avoid whatever else is coming down the pipeline. So let's go now to CAD Swiss. So CAD Swiss, with this new trade deal with China, I'm interested to see what happens with the CAD. Obviously, CAD dollar is very highly correlated with oil prices, and we just saw a tanking in oil prices. Oil prices are slightly up, but production is still high, and it's getting higher now that the U.S. is selling the Venezuelan oil on the market. So we may see this push continue to push back down, right? We may be in that kind of capitulation zone where it just kind of sits sideways for a little bit before it kind of breaks out, right? And you can see we've been sitting sideways like the Iceman for a while, and we're just haven't kind of moved yet. So CAD Swiss, I think when it breaks out, it will break out in a very quick way. The direction it breaks out has a lot to do with this China trade deal and the oil prices. Keep your eyes on that. Let's go Meta. Right. So Meta as well. I think, look, Meta is one of those stocks that you don't count out ever. They are laying off staff, which will tell you that they're going to be more immediately profitable. I'm just going to tell you guys that right now. They're going to be more profitable as they lay off staff because that's less payroll and overhead, less products they're producing, and reducing of SKUs. So that will help them recover a little bit. Is it fully done? No. I still think 507-ish is my bottom price on Meta. But do I think there'll be a pullback before we see that? Yes, I do. Right? Do I think we'll see a pullback before they see that? Yes, I do. Ford has just been sitting there. The EU uncertainty, because Ford has been trying to really push into the EU market. The EU uncertainty is gonna hurt Ford. Okay, it just is what it is. Let's go ISRG. I think we get a gap filler, 466. Is their recent success going to stay up? I don't know, right? What happens in medical costs? There's a lot of different things that can impact this. Do I think it needs to fill this gap? Absolutely. Absolutely. I think this needs to fill the gap. And so we'll see if Intuitive has a surge up or if they surge down. Disney. Let's see. Oh, I don't really look. I'm not a huge Disney person. I've never actually even been, and I live in Orlando. I will tell you this, locally, we do get this information all the time. Disney just got approval here to expand one major park and 3 smaller parks, so doubling basically the size of Disney. There will be 52,000 hotel rooms here in Orlando at Disney, and they will be anticipating over 100 million guests per year at the parks. Right, at the parks. So I think Disney is going to, ultimately be a rally, but I still said I'm not buying Disney until it fills this gap at $92. That is, I'm not buying Disney until it fills the gap at $92. Okay. We talked about those previously, Paul, Southwest and Delta. Not today, but they're just going to be flat for a little while. Travel will be slow, and it'll be interesting if there's a travel issue with the EU. Then that'll be interesting for those companies. So be on the lookout for that. Lastly, Bitcoin. Bitcoin again, I still see my next profit target on Bitcoin is basically 101,000. We're sitting at 92. We had this massive push up. Of course, we're going to have a pull back, and over the next couple of weeks, we'll probably have the next big push up. Oh, Mark, that's awesome. Yeah, I am. And I'll be at the event as well if that's what you're coming in town for. Speaking of, we do have a big event like on the trading education side of things with Mark. I'll be there. Brent will be there. Would love to meet you guys. If you don't know anything about it, reach out to Brent or join a webinar this week, and would definitely love to have you guys there. Now, I'm going to wrap this up here because I do need to go, but there's one thing I want to do before we go, which is look, all session long, right? I've been talking about there's ways to help protect your assets, help you manage money, help you grow your assets, and specifically for retirement. And what I want to do is this. You can either use this link right here to book time directly on my calendar. Or give me a second here. I have a secondary link you can use that you'll be able to book either on my or Brent's calendar. And if I can't be in there, right, I will we'll definitely look to book. So you can use that link. You can book time on my calendar or Brent's calendar. And we have other people that'll reach out and help set up the appointments and all of that with you, confirm everything, make sure, and tell you how to prepare for the appointment as well. And we just want to make sure that, hey, you have the information that you need in order to make the proper decisions about what's to come in your life. I can tell you this simply by talking with me. My in-laws and my parents have doubled their retirement since working with me. Doubled it. Doubled their income from in retirement. Very, very rare to do that. It's what I help people do. Right? We're able to help people in very unique ways, and that's something that I want to make sure that all of you guys have the ability to do. So you can either use those links. You can type in your phone number if you want to right now. You can type in the word me in this chat box right now, and I'll get your names and numbers and all that. And I'll have somebody reach out and we'll schedule appointments with you guys. So if you guys have anything else that you need, go ahead and use those links to book time with myself or Brent. Really looking forward to speaking with you all individually and meeting a few of you guys in person. And I'll see you back next week, same time, same webinar, same link, and you'll get an updated email. And then let's see. Also, look in the Discord. Sometimes I'll be able to process and post the recordings, and I will do that for you guys as well. All right. Same bat time, same bat channel. That's right. So you guys have a good one. I will see you guys next week. Thank you guys so much. And this week in webinars, I have 2 on Monday, 1 on Tuesday, 2 on one on Tuesday, 1 on Wednesday, and 2 on Thursday as well. So I'll see you guys there. No, I haven't started flight school yet, Paul. Not yet. So BK and Steve, thank you guys for typing in your phone numbers. Really appreciate that. I will make sure we get somebody to on the phone with you and to set something up. It'll be Monday when I give you guys a call. Okay. So thank you guys so much. You guys have a good one, and I look forward to seeing you guys in another presentation very, very soon. BK, give me 1 second. I'll send it to you. Let's see. So these webinars will be more focused on the hedge fund trender for anybody that's interested. And that's one of the tools that I use in this session. So let me send you guys invitations. I'm going to send you guys a specific link that you can use to register for that webinar coming up. All right. So I'll see you guys very, very soon. Thank you guys so much. Have a good one.